Hello, guys, and welcome back. In today's episode, I'm really excited to share this one with you guys. This is it. This is what it comes down to every day when you are trading. When you come into the market every single day, the number one enemy you are facing is yourself, your mental state, your emotions, and pretty much that index finger on that trigger to get in and get out at inopportune times. And this is what I wanted to cover today. This is our first episode of the play by play. And I want to cover this Amazon trade that we executed, or how we took profits on Amazon today or yesterday, March the 7th, to be able to lock in 21,881. We initiated this trade on the 4th, and we closed it today on the 7th, or yesterday on the 7th. So I'd say that's a pretty good profit, average profit for every single day of the week so far. So from Monday through today, or yesterday, I'm sorry, I'd say that's a pretty solid, good 5K, just over 5K per day, basically. So on this episode, we're gonna cover how we got in and why. And then we're going to cover how I went about deciding where I was going to take profits, what I was looking at in detail. So luckily, I was taking notes by sending a chain of text where I was detailing exactly what I was looking at and how I was making my decisions to get in, to get out, to get back in. Because at the end of the day, guys, you have to remember, you have to manage your account based on you, your tolerance, your account size, and what you can handle. So you have to remember that this is your account. It's real money. So you have to make sure you're on top of it because this is yours. And you have to manage that. Nobody else can manage that for you. So you have to be vigilant and pay attention to what the market is telling you. And that's what I hope to share with you guys here today. So I hope you enjoy. Let's get started. All right, so here is the gain loss statement for the day. Amazon was the only stock I actually traded just yesterday morning. It was the only one. I was on my entire focus for the day was to collect profits for the day, and then adjust, because I definitely saw the target was going to be hit. That was the vision. That was the target. We had it in sight. And there was nothing but air between those targets. But on the way down, I mean, I still collected a ton of profits. As you can see here, I had strikes. For my initial strikes were the 1660, 70, 85, 95, and 700. So as you can see, I layered in, and I'll show you how I got into those. And then on the day, I got back in. So you see here, 77. After taking profits on these and locking some in on the 1700s, what I did was I got back in at these strikes and this one here to lock in the 1700 by turning it into a spread. And I'll go over that in a little bit more detail so you can see why I sold. So what I did here was I sold to turn it into a spread, a call vertical spread. So now my profits are locked in regardless. But this is a way I find it to be the safest way to play both sides. So the markets will bounce. And in the event of a reversal, I want to lock in my profits, but I want to be able to take advantage of the move up as well. So what I want to do is sell a call, turn my position into a spread. My profits are locked in. So on this one, you'll see I was locked in. My minimum profit would have been 2,500, and I locked it in at around 2,800, no matter what. So it would have to go all the way up to 1,700 before my profit would start to dip below 2,800. I ended up actually profiting 3K if you do the math here, just a little over 3K. So I actually ended up doing better than this 2,800. So it actually worked out really well. So let's go ahead and take a look at this. All right, so here are our entries on Amazon. And we'll come back to this. I'm going to share the bigger picture, and also we can see why we did this. But here you see we initiated these positions on March the 4th, Monday. So we bought one. This one got filled before this one because I was putting in my orders below the mid, trying to get below the bid. And at the end of the day, this still was the most expensive strike I paid for. It was in the money. Both of these were put in basically at the same time, but this one got a fill first. So I always like to say, always initiate your position in the money. supplement with out of the money positions. So supplement with out of the money, okay? I always like to say that I did get a fill on this one first, got a better pricing. This one was a terrible pricing at the end of the day. Even when the position came our way, it still took a long ride before this one. It was already deep in the money, and it still took a while before the value came above 23.50 for me to lock in some gains on that one. Okay, and then later that day, or what, 20 minutes later, just over 20 minutes later, we enter some more deep out of the money this time. Okay, and then as the market kept going higher, we entered two more for the day to call it a day. This one was at the money, and this one was in the money. Okay, guys. And then the next day, I added to my 1660s out of the money because we are expecting a significant move lower before the end of the week. So we are expecting a move 3. If you're not familiar, market moves, take that course. You understand what we're talking about. All right, so here we go. So let's analyze the bigger picture. Why are we so bearish? What are we looking at that is telling us, hey, we're gonna start reversing lower. This is not going any higher. Okay, so this is the S&P. Okay, we're looking at the S&P here. And as you can see here, March the 4th is this little line here. This is March the 4th here. Let me change the color on this. And what do you see here? Okay, the market fails to stay above 2,800. Look at this here, okay? So obviously we're coming into some resistance here. And as you can see, we can go all the way. Obviously, this is a resistance level. So we need to break this level higher in order to have a bearish case. But no, what the market did instead was it gapped up on the 4th and it started to sell off, and it sold off pretty hard, forming what we call a black candle for the day. Well, actually, it ended up being red, but when it initially started, it was forming a black candle, and it was just giving us a significant bearish case. And then when you look down here at the RSI, what do you see? We have negative divergence on the RSI, pointing to a sell-off. Okay, so as you can see here, as the market goes higher, the RSI starts to pretty much be lower and lower, and then you have this formation here, and it just can't be ignored. Okay, so we initiated our position. So that's the market analysis. Okay, so let's take a look at Amazon itself, and let's take a look at what Amazon is doing. All right, so here's Amazon on 3-4, this candle here. Okay, what did it form? It's nothing major, nothing major saying that, hey, Amazon is going lower. Is not really forming a reversal pattern itself, but the markets are. And I personally like and love to look at the markets, and you'll see how I use that information, what the markets are telling me, to pretty much determine if I'm going to get in, if I'm going to get out, because the markets tell a big story. The market internals tell you a big story. So the only supporting case we have here for Amazon is that the RSI is above 80 here. Pretty much close to 95 or 100 on the 4-period RSI. And Connors is touching the 80 over here, Connors RSI. And then we have this one pretty much at the peaks of 100, basically. So now that tells me, okay, we have a strong case to go lower. So let's see. So now I'm comfortable. So now my stop for this basically is the high of the day. So for me, this move would have been invalidated, and you'll see how I pointed that out on a chain, text chain, and I'm covering why. To me, if it breaks 1710, the move is invalidated, and Amazon could come back to the 200 MA over here and possibly break it. But Amazon did not do that. So my stop is 1710. So obviously I entered all the way around this area here, from when Amazon was around 1680 or so and higher, all the way up to when it was over 1700, right? So I entered all the way in this area here. And my stop was 1710, not that far. So yeah, my risk is pretty much what I put in. And obviously I'm going to lose a couple of $1,000 if this breaks 1710, but I will take my loss. Because you know what? Cut them early. And just cut them at the knees before you end up taking a massive loss. I'm not going to ignore what the market is telling me. I'm not trading what I think. I'm not trading with my emotions. I'm trading what I see. And what I see is the market is telling me we're going lower. Amazon is telling me, hey, I'm going to follow what the market is saying. I'm going to go where the market goes. That's the secret. Go where the market wants to go. Go. Okay, go. with the market. All right. I'm not gonna write that because obviously my handwriting is real sloppy. But here we go, guys. So obviously Amazon definitely sold off and it went our way. So let's take a look. All right. So here's our entry points. So this is our first entry here. Okay. Our first two positions. So this is the entries at the 1685 and the 1670 strikes. So obviously the 1670s got filled first at a better price, and then these got in at 23.50 or so. So these are the strikes I got in. So this one, it's a put, so it's in the money. So this one is in the money. This one is near the money. So it's just $5 off. So I'm gonna say it's still out of the money. But obviously, as you can see, I want to initiate within the money, supplement out of the money slash at the money. This was a poor entry. I honestly wanted it up here. I had strong reason to believe that the market was coming down. I was watching this, but unfortunately, I was tied up and distracted with other trades, and I just was not able to take advantage of this. But this is where we wanted to get in. Obviously, the RSI was pointing to a good, nice reversal. This would have been a good option here once it started to engulf this candle and just say, hey man, we're going lower, lower highs. So it's like, you know what, that would have been a great entry. Even at the 30-minute, you would have seen that the RSI was at the overbought levels and it was signaling a good entry. But whatever. The big picture is still in play. I still have my stop. So my stop was all the way up here. It's fine. Yeah, that's a nice little chunk. But remember, my target is down to 1620. So it's all right. Anyway, the market rallies, or Amazon rallies. And at this time now, at 1400, we added some more. So we added at the money and we added in the money. Okay, so we added 1695 and 1700s right before the end of the day. Oh, and I forgot this one here. Two candles later, I did add significantly out of the money here at 1660. So I initiated a position. I added to my position at 1660 to supplement the move or my position so that I can take advantage of the move that's coming. The next day, so that was the 4th. This is the 5th, and ignore the dates here, guys. This is because of when I took the snapshot. We had a move 5 on Amazon, obviously. Just move sideways, nothing there. Well, it was a move 5 throughout most of the day until we got this huge sell-off here. See this? This is what turned it into what we were expecting. So as you can see here, at 12:36, Leo sent out a message saying, hey, guys, move 6 expected, obviously. Market sell-off between 3 and 4 p.m. I mean, this was one for the records, I gotta tell you, because I mean, I've never seen it happen right on the last few minutes, but that is exactly what it did. And boy, was it a sell-off. Look at that. And this definitely supports our outlook. So this is trading pretty close to my stop personally. So you see my stop is right here. This is my stop. So, I mean, it was pretty close, but you know what? Like I always say, have a plan. You know, let me start that over. Let's see. You have a plan, have a plan. Trade your plan. Oh, trade your plan. Okay, guys? That's the key. You have a plan, trade your plan. And stick with it. You know, that's what it is. If you have a plan, trade your plan. You have a stop, trade your stop. You know, get out. It's just what it is. Manage your account accordingly. That is what you pay yourself for, to manage an account, to manage your properties, I mean your positions accordingly, because you can only handle certain moves based on your account. So you have to manage and look at the bigger picture and say, hey, you know what, when I see this, I feel like this is going to be invalidated. And you're going to be much more comfortable when you make decisions of your own accord, because the main thing you have to remember is you have to stay in control, guys. Stay in control. Okay? Stay in control. If you're not in control, you're already losing. If you're hoping, if you're praying, you're wrong. Okay? If you're hoping and you're praying, you're wrong. That's the wrong answer. Get out of your positions, start over, come back when you're ready, because you're not ready to be trading if you're hoping and praying that the market or the stock goes your way. You're wrong. Okay? If you're not ready for the loss, if it hits your stop, then you're wrong. Don't trade it. Make a spread. Take less risk by turning it into a spread or something else. You just don't take unnecessary risks that you cannot afford to lose. If you're not ready to take the loss, don't do it, okay? And lessons learned, guys. I mean, I went through a lot of gains. I went through losses, and then I made them back. And it's just these. I'm just sharing with you guys the lessons I've learned on my journey. I'm still on my journey. I'm still going through ups and downs. But this is what I'm learning as I go, and this is why I wanted to share this with you guys today. Okay. All right. So this was the fifth. This is the sixth. I did nothing except watch it come our way. So nice little move three here. Nothing. I didn't add. I didn't take profits. I didn't do anything. Okay, guys. It was just the expected move for the day. I just let it be. Okay, so now let's get straight into the play-by-play. So this is what I'm excited to show you guys. I'm gonna go ahead and show you how I went and pretty much called it out as it was happening, right before it happened, so that you can see what I was looking at to take advantage, take my profits, and take it from there. So obviously we gapped down. I started taking profits around here. I got stopped out, got stopped out here. I moved my stops. Now that I'm in the money and making money, I don't want to take any chances of there being a market reversal. And you'll see how I like to point out that the 1030, 1040 time frame is the time that the market will reverse if it's going to reverse. So this time here, you start seeing these patterns. You'll start seeing that the markets are setting up similar patterns. And what are you seeing? That the Amazon is at its pivot. And for me, these are key levels. This is where I like to collect. You can always get back in. It's not a problem to get out and get back in. Get back in on a better pattern, Get back in on a confirmation that, hey, we are going to continue lower. And look at how long it took to confirm that we were going lower. So I got out here. I locked in some profits here when it broke the high. And then I got back in here, like on these two candles here. Okay, and I'll show you why. This part here is a little exciting because I want to show you what the market was telling me to say, hey, get back in now before this thing breaks down. And look at how it broke down beautifully. And that was great. And then I took the rest of my profits at 1620 and around here right before the market closed because they failed to break 1620 on high volume. And you'll see on the video playback what I was looking for. So I basically boxed Amazon in here like so. And I set two alerts and I wanted to, so this one was take profit, right? I wanted to take profit, and this one was going to be hold for today's gap down. But because I didn't get that confirmation and I wanted to see a red candle below 1620 and the volume pretty much like it is here, pretty high. I wanted to see both of those things happen, but I wanted to see it below 1620 because it definitely would have confirmed to me that yes, we're gonna gap down, and we did gap down today, but we don't know that. I don't know that. I'm not 100% certain. We already hit our target of 1620, which is a huge resistance area. Obviously, as you can see, once it hit that level, it just consolidated for the day. Okay, so I don't want to take any chances. Let me take my 21K and call it a day. That's a good week for me. You know what I mean? Let me go make sure I transfer some money to my checking account and let me pay myself because this is, a good trade, good solid day. I can always get back in the next day, which I did. I did get back into Amazon today. I got stopped out on the high of the day, and that's it. I'll wait for a better entry and I'll get back in, which is kind of setting up now, honestly. Set up a nice little doji double top, bouncing off of the 50 MA on the 10-minute candle. So it's setting up a nice pattern now. So I may get back in now at a higher level so I can get better pricing. And now I can write it down for the rest of the day as we expect the markets to continue to sell off. Okay, so that's what you have to pay attention to. You know what? I'll take my loss. So I took a $1,700 to $1,800 loss today. No big deal, guys. I'll take my loss and I'll get back in. Yes, I could have held through, but instead of losing 1,800, if that thing keeps going higher and higher, I may lose 3-5, you know what I mean? 3-5K. Now I'll take my $1,800 loss, call it a day. I'd rather live to fight another day. And that's exactly what I'm doing here, okay? So let's move on. So now I'm going to go play by play, show you what I was talking about as I shared this text chain, okay? So the question was, if RSI is low, do you plan on reversal on the daily? I like both columns, RSI and the 4 period, to be below 20, especially if they are below 5, which is the lower line here. Yes, but not guaranteed. So I have to look at other factors being the markets, the market internals, and what the market is telling me. So when looking at Amazon RSI on the 4 period, started hitting over 80 on 3-1. So let's take a look here. On 3-1, it's this candle here. started hitting over 80 already, right? So we're over 80 on the 4 period, which is the one in red. And then we're looking at 3-4 from so 3-1 and continue higher. Connors didn't hit 80 till 3-4. So as you can see, Connors RSI is this one here, the white one. It didn't hit it till 3-4, which is when we started initiating our position here, okay? So 3-4 candle right there. Now, from there, both above 80, reversal commenced on 3-5 after gap up, hence why you can keep adding. So now, I continue to add to my position on this candle here, okay? We initiated our position on 3-4. I added on 3-5. My stop was 17.10. So it was a tight stop, guys. It wasn't far, but this is what my account, what I can handle, my personal tolerance. You know what? My stop is 17.10, which is pretty much a break of the high of that candle right there. So the 3-4 candle, if we break that high, we close above that high, we start rattling above it, that's it. The move lower is invalidated in my view, and I'm just gonna move on and live to fight another day. Now, if we get another reversal pattern, then yes, I'll be looking to get back in there. But as far as I'm looking at the big picture here, okay, this is what I'm looking at. This is how I'm analyzing it. This is how I'm playing it, okay? So entered around 1696, 1705. Stop is 1710. Target is 1720. So, I mean 1620. So our target is 1620, which is somewhere around here. We entered all the way up here, guys, right? So in that area, so that's a nice little move down to a short stop. So this is our stop, right? This is our profit, right? Not bad. Risk reward. I like it. So I'm gonna take it. Okay, guys. So let's move on. All right, so collecting profits on the way down. I am gonna be collecting profits on the way down. Since I layered into my position, I'll wait for certain targets just to make sure we start locking some profits, and we'll take profits on the way down. All right, there you go. First target today. All right, let's just skip that because that's something else. All right. So I was saying, so I'd get 5 to 10 contracts on the break low of the pre-market. When it did that, that's what I would have done had I not had a position already. Obviously, I did not add to this position. I was asked about Tesla. Tesla, I stayed away from because it was so Tesla looking good for continued downside as well. I'll get in at 940 candle to make sure. I'd get it at 940. I already had a position on Tesla on my smaller account, so I was not gonna get in. But this is what I was looking at. 10-minute huge candle on Amazon. I think reverse is coming though, short term. I disagree. Okay, that's all that matters. When you get in, feel comfortable. You always do better that way. So what I'm trying to say here, guys, when you're making a decision, make sure it's your decision, that you agree with it, that you're comfortable with it. If you think that you're gonna make a better play when you're going higher, as long as you have a plan and you trade your plan, you're gonna be okay. That's fine. Have a stop. Have your target in mind. Have that before you even initiate the trade, and you'll be fine. So if you want to do a short play, you want to scalp, by all means, go ahead and do that. It's not my style to trade so much that way. I do occasionally take some, but I can tell you right now, they're not that good. I do a lot better on these, and that's why I keep track of this for myself. Markets are headed lower, so focus on the downside, okay? So we're going to focus on the downside. That's what I'm focusing on. I set my alerts on the tick at the minus 500, minus 1,000, plus 500, and plus 1,000. The tick is going to tell the story, and you'll see it play how it played out yesterday. Everything paused because all markets at pivots. All the markets were at their pivots, and I'm going to show that image here shortly. VIX is hitting new highs. It's coming down. So at 948, I'm starting to look at what's going on. 6 or that this was supposed to be SPX. All right. Back at daily 200 MA 2750. So hit my initial estimate was that it was going to hit this level. Look for a bounce around 1030, 1040. All right. Here we go. Bounce on what? Everything. Yes, the markets similar to yesterday. So yes, it would be a bull trap. Why is it important to follow the rules? This is why it's important to follow the rules. And you got in on the break, you would be up nicely now and have been around 1660. So you would have been in. So once the market broke below the low of the pre-market, a good entry would have been around here, 1662, 1660, which is what I was monitoring, is where I would have got in. It was around 935, 936 at that time, and that's why I said it here. As you can see here, where did I say it? There you go. Boom, 935. That's when it broke the pre-market low. That's when I would have took it had I not had a position on it already. This is why it's important to follow the rules. Had you gotten in, you would be up nicely. Oh, been in around 1660 area. Oh, I play it accordingly. Should be short term, but you never know. So I like to lock in gains and then back in, or lock with a spread strategy I told you about. So this I'm going to cover in a little bit later. I did initiate a locking strategy by turning my position into a spread so I can take advantage of the move higher, which was this one. Unfortunately, it didn't come back to the level I was expecting, which was here, 1660. And then on the reversal pattern, I would have bought those back and then rode the market down. So that way I wasn't risking myself by buying calls and having those run against me. Okay? Nothing here. Wait for the close. If this candle, see what pattern it forms. Oh, so Tesla, wait for the close, see what pattern it forms. If it's good, maybe a good time to enter. RSI looks good around the 10 and the 30 minute with negative divergence. You can enter here. We'll stop on the close above break, above 281.25. So I was analyzing Tesla here, guys. I'm not gonna go over that because I didn't take any trades. I didn't add to it. So here I was saying, if you're gonna get into Tesla, you can get in, but get out on a stop at the high of the day. So here, high of the day, that's your stop. But I'd wait until the candle closes to make sure that we're setting up a nice pattern, okay? Amazon, I want to see start moving lower again on the next 10-minute candle. So it's 10:06 right now. This is around the time Amazon starts to consolidate right here. So this is the 10 o'clock candle. So 30, 40, 50, 10. So on the 10-10 candle, I want to see Amazon start making new lows. Otherwise, the 10-10 to 10-15, 10-20 area, if the market starts setting a morning low, it could start reversing from here. So I want to be cognizant of that because I've seen the markets reverse. I pay attention to key time frames throughout the days, guys. I analyze my charts. I study. I immerse myself in this because I want to make sure I don't get caught by surprise. I've been caught by surprise a lot of times. So this is what I pay attention to. Lessons learned, guys. Just pay attention so you can see and not get caught by surprise anymore. You know, I don't want to get caught with those move 4s or 8s by surprise anymore. I want to make sure that, hey, I protected myself, make sure I locked in gains, but still gave myself the opportunity to continue to gain the most possible. Because at the end of the day, guys, if I got these strikes at 1700, I'm not going to be able to get those prices for those strikes again at that low. The market is just not going to rally that high. I'm not going to be able to pay that low of a price, $12, $4, or whatever I paid for these. So this one I bought around $4.40, $12, whatever. There's no way I'm going to be able to get those prices anymore. Not for Amazon. So I want to make sure I keep some of those in. I'm already deep in the money. I mean, deep in the money. The chances of this thing going back up that, this day is just not going to happen, right? But I want to make sure I do lock in gains. And I also want to make sure that I keep something open for a potential move lower. So I'll go over that, okay? All right, so I wanted to see Amazon start moving lower. Tesla looking more and more like a long play, but I don't want to go in the opposite direction of the markets. So at this time, 10:06, Tesla was making new highs, basically kept going higher and higher, and it was looking more like a long play. So I said, stay away from Tesla. Amazon long? I'm not going long. Don't fight the market. The market is going down. It's still going down. This is 10-10 candle. I want to see a new low. And that's exactly what market did. The Amazon did. So it made a new low. So now it's confirming the move. I'm comfortable. If it didn't, I said here, I may start taking some off. Then Tesla may be an evening star. Again, don't fight the markets, guys. 6 contracts all in on Amazon. Also in the green. So all my contracts were in the green now. I am looking at 10-minute, nothing yet. So Tesla may be an evening star. I'm looking at the 10-minute. I don't look at the 3. I don't look at the 5 anymore. They're too distracting. They go up and down, up and down, up and down. Yes, it may have been forming that pattern. I didn't see it on the 10. I wasn't comfortable. And again, I already said, Tesla, it was, it wasn't a good thing to be playing. So anyway, You should have done Amazon. It will hit the pivot. So the pivot we were looking for, the first pivot was going to be 16, this pivot here, around 1648, guys. Okay, so that was the pivot I was talking about first. All right, so let's continue on. Okay, after Amazon breaks the pivot, I will be looking at the markets around 10:30, 10:40. When they start forming morning stars, I will take more profit. Okay, so here we go. When the markets start giving me signals that they're thinking about reversing, I'm gonna start taking profits. I'm gonna start locking in my profits because Amazon or whatever stock I'm trading will usually follow not long after, and you'll see on the video playback here. So at the same time, the VIX should be forming the opposite pattern for the short-term intraday bounce, right? So the VIX, if the VIX is going higher, it may start forming an evening, and then the markets are going lower, they may start forming a morning star or a hammer or whatever, guys, okay? All right. At that point, when I get another signal to go short, I will re-enter to the downside. Pressure is in. 10:20 now. The pressure is in. Look at the tick. The tick is telling you the story, guys. Okay? Look at the tick. Boom. One contract off the table. And you'll see this on the video playback when I show you guys as I was sending this and what was happening. I had puts at 1660 through 1700. Amazon, I am taking the most at risk off the table first. So what was I doing here, guys? I was taking the ones that were most at risk, which were the ones that are closer to the money. So the 1660s, 1670s, 1685s, I'm taking off first, and then followed by the 1695. I'm gonna take those off first. Why? Because they're closer, and they're worth obviously less than the ones that are way deeper in the money. So I went ahead and started taking profits. Okay, and let the ones deep in run for potentially bigger profits. Always moving my stop in the event of a reversal. And I'll show you how I did that. And my stop I moved based on the last 30-minute candle high. I'll break of that. And like as you can see, so also this is when it pays to look at the 30-minute candles. What pattern is it forming? That day, that way you don't get squeezed out on a short pop. So you want to look at the higher time frame because they give you cleaner signals. And with cleaner signals, you can make better decisions. That way you're not fighting yourself. Because if you keep looking at these 1 minute, 3 minutes, and 5-minute candles, all you're going to see is all this up and down, and you're just going to get scared. And you're going to get squeezed out as they come for everybody's stops, okay? When it's going to reverse, a 30-minute usually forms a solid hammer or morning star. Also, I hope you got the book here. This is a quote from it, okay? And this is a great quote, guys. I got this from Fee from the group. She reminded me of this. She said, "Hey, if the trend closes above 2.0, which it did the day before, the market has a 80% chance of rallying the next day." Oh man, this is trouble. So the tick did close the trend, which is dollar sign trend. You guys can look it up if you want to learn more about it. Obviously, I recommend that book, Mastering the Trade by John Carter. It's a really good book. He kind of covers it there. I never had used it before. I do look at it once in a while. I don't usually use it actively, but this was a good point. If the trend closes below 0.6, the market has an 80% chance of selling off the next day. The trend yesterday did close above 2. Markets failed to rally. So what does this mean? Here's another quote. The moves the next day won't necessarily be big moves, but they'll generally be opposing moves. I'll keep this in mind as I'm viewing my setups that next trading day. If the previous day's close was over 2.0, then the next day I'm going to focus more on the long setups and ignore short setups. Here's where it gets interesting. If after reading 2.0, the markets can't rally on the next trading day, then the markets are in deep trouble, guys, and are setting up for a major slide. This has happened during the first week of July 2004. Okay? So now, at 10:33, I'm looking at this as a dead cat bounce. No bullish engulfing, just poor volume on the upside. And the markets, they should hit resistance at or below the pivots and continue lower. Amazon itself is behaving well, so I am still in. Boom. So here I said boom. So we got the 10:30 dead cat bounce now, forming an evening on markets for continued down move. Amazon breaking the pivot. So we should see markets continue to slide down through 1 to 2 p.m. with an expected afternoon pop. Okay. So we should see markets continue to slide down through 1 to 2 p.m. with an expected afternoon pop. This is a frequent action of the markets. When we're having a move three, there's a potential for an afternoon pop. It not always happens exactly, but we have to be cognizant of it. So again, just like I look at the 1040 time frame for a bounce, I'm also looking at other time frames just to make sure, hey, I don't get caught by surprise and I take my profits. Okay, taking next profit on the next contract at 1640. At this point now, because I do want to retain as much profit as possible, I have moved my stop to the high of the last slash current 30-minute candle at 1653. So now my stop is pretty close to where the price of the Amazon is. So should Amazon bounce to that level, I will take my 10K. That's my open profit at the time, and wait for a better entry. Okay. See, they can't resist but to pause at pivots. It's a magnet. So everything is pausing at the pivots, guys. And like I said, I use the Persian's pivots, just 3 lines. There are in between lines if you guys want to turn those on. I personally ignore those and I just focus on the markets and where the markets are. So here we go. Amazon is drawn to it. When it breaks below it, so it's drawn to it. So Amazon is drawn to it when it breaks below it, just like everything else. Same as the markets, but the patterns being formed on the markets keep saying we are going lower. Plus the tick still below zero and keeps hitting minus 500. I'm going to share this right here, right now. So let's take a look at that. Okay, so here we go. Still below zero. See this trend line here? Still below zero for the most part. It's trying to pop above it, but it's still below zero, guys. It keeps hitting all this time below 500, 500, 500, 500, 500. Only pretty much broke above it twice here and barely touched it here. Right? We are forming nice little dojis right below the pivots. Dojis. See, a little hammer here. Just, it's just pretty much reversal patterns. Little doji here on the VIX, which is an opposing. So it should be going the opposite way that the markets are going. So that's what I'm looking at. I'm constantly looking at this screen because I want to see what the markets are doing more than I want to see what my stock is doing. Move my stop down to the last 30-minute high. Taking profits. So this meant to say taking profits here. I sold the 1697 to lock in profits for my 1700. So what I did there, I turned my position into a spread, locking in around $2,800 in profits so long as we stayed below 1700. And if we went above 1700, I would be at 2500 or so. And that's all I did. Why? Because I want to take advantage of this move higher. If it moves higher, I am still expecting a move lower. So when we get a nice little reversal pattern that we're going to go down, then I'll buy those back at a cheaper price. Right? So when we get a reversal pattern, like a little evening star hammer, we have a confirmation that we're going to start going lower again. I'll buy that contract back, the 1697s, and then I'll continue lower. But this is a no risk situation here, basically. And by what I mean by that is I didn't buy a call that I would now have to get stopped out of if it fails to go higher. What I did was turn it into a spread that already has profits no matter where we go, so I can let it expire and it's fine. So move lower still expected. So I will let it go up and see if the reversal, I will buy it back for less and let the down move continue. If it fails to go higher from here, I'll just leave the spread on till expiration profits already locked in, and we'll add on the put side on break and close below the pivot. So now I'm looking, so if we fail to go higher, my next entry condition is a break below the pivot, right? Indicating to me that we are going to continue lower. And you'll see how and why I deviated from that because of what the market was telling me. But normally, I couldn't ignore what the market was saying, what the market internals were saying. Had Amazon done this without the markets, that's what I would have wanted to see. But because the markets told me a different story, I said, hey, let me get it before the break. And you'll see why. So these are the things I'm looking at. This is how I adjust. So I want to see a break below the pivot on Amazon, basically. So if Amazon breaks below the pivot, I want to see a break and close below the pivot like so, right? And then I want to see continuation here. So that is if Amazon is doing something other than what the market is indicating. And now, because the markets gave me a different story, and you'll see in a little bit. All right. So now that the markets are started to reverse, although a bit earlier than expected, no need to take chances. So I'll collect profits on most. So I collected profits on most. So here I collected profits on most. Some in. So I collected profits on most, locked some in for continued move lower because I will not be able to buy these contracts at those prices anymore. So when I get a nice reversal pattern with matching RSI signals on the 5 through 30-minute time frames, I will look for close the 1697.5 strike and let the move play out to the downside. It's tough. It's tough because I will have time. I will have to time this right to make the most of it. Okay, so go long or sit. Again, don't fight the markets, guy. Sit. Did you play short side at all today? No, just paralyzed. Okay. You would have killed on the break low. No safe play now because the market's still at or about the pivots. Anything can happen. And current pattern supports upside move. So I will wait but not play the upside because overall markets want to go lower. So on Amazon, I'm expecting possible move back to 1660, but the tick, man, it keeps saying no. We are going lower. I'll wait for confirmation and solid move below the pivot on markets and Amazon to enter more puts. Yeah, around this time it's noon, so now it's 12 o'clock, guys. Everyone is out to lunch, and now the market's playing. Markets playing around their pivots. Not worth risking anything right now. Let's give it an hour and some solid confirmation. Don't want to get trapped. Adding here, I want to see markets break this upward trend. All right, so here's the image I sent here. Okay, so the markets are at or about their pivots, but now they're starting to breaking these pivots on the high side, pivots on the high side, pivots on the high side, and then the VIX broke below its 50 MA here, right? And then the tick is starting to make some nice positive divergence, but it's still below zero overall. So I'm watching. This is what I'm watching as the market goes on. So these are the candles at the time. This is what I was looking at. So this is what the market is telling me. So I'm trading what the market is telling me. So that's what I'm watching, guys. Okay. I'm paying more attention to the overall markets than the stocks themselves. Okay, if we close below pivots on all, I may add more puts. So this is at 1220. At 1220. So now that would have been somewhere around here. Going to wait for the candle to close. What I want to see, though, is a break higher with good reversal signal. So I did want the markets to go higher, honestly. The markets did go higher, but Amazon didn't follow suit. I did want to see a nice pull back to the Fibonacci levels I was expecting. So 1657 area, 1660 is why I picked that area. On strong bearish bar. So that what I want to see was a move higher with a nice reversal so that I can go ahead and buy those back and then take advantage of the continued move lower. But this day, it didn't work out. On strong bearish bar close only. What I want to see is a break higher with a good reversal signal on a strong bearish bar close only. So here's, this is pointing back to this here. So if we close below the pivots, I may add more puts. This is referring to Amazon. So I'm only going to add on a break below the pivots at this point because the markets were going higher still. I would only add to Amazon on a strong break below the pivot and a strong bearish bar. So I wanted to see some nice, decent little red showing me that we were going to continue lower and it wasn't going to be a fake out. And it's like, we're going back higher. I got you, guy. You know what I mean? So that's what I was looking for there. So this is why I wait for the close. And what I was referring to is obviously the pattern that it was forming. All right, so let's take a look here. So here is trend is your friend until it isn't. Okay, so this is this image here. Okay, this is around that time frame. So 12. Let me see when I sent that 12:02. Okay. The trend is your friend until it isn't. So the markets are starting to go higher. So I drew some lines here to see where the markets are going. Hopefully, I was hoping they would come back to 2760 and then reverse lower, but that's not what they did. But anyway, the trend is your friend until it isn't, right? So I just wanted to see. I drew that line, and when I saw seldom break below that, that's when I was going to get back in, okay? So let's continue here. 1237. This is why I wait for the close. I don't want to get faked out or pay more than I should. Amazon is trying to head lower, but market's still in the same area. And tick is above zero at this point. So see, even though Amazon was trying to break lower here, it was trying to break lower. I wanted to see two of these candles basically below it to tell me, yeah, we're gonna go lower, because the markets are still going higher, guys. And I was not happy with this. The markets are going higher. Amazon is trying to go lower, and the only way I'm gonna be convinced that Amazon is gonna go lower and continue lower without the markets is if I get a nice, strong, solid candle down here, maybe even a break below here. It's the only way I would have got back into Amazon when the markets were breaking above their pivots. Um, and that's what it was. So here we still have the negative divergence, still pointing that we're going lower, which is nice. I like to see that. But again, the markets are going higher, and on the markets going higher, see, markets are staying. They're staying on their pivots, still making higher lows. I'm not comfortable with this yet. I wasn't comfortable with the move yet. The tick is trying to push above zero. It's starting to hit these new highs. See, it's starting to hit the extreme levels, over 500, 750, almost at 1,000. So I don't know if the market is going to reverse from here. I'm preparing for it. So that's why I said, hey, guy, let's take some profits out here. I got stopped out here when it broke the high, which just was the 30-minute high, the 30-minute candle high. So when it broke this level here, I said, let me lock this in. So I turned my 1700s into a vertical. And I said, hey, if we move up to 1760 or 1660, I'm sorry, we should be getting a nice little reversal pattern at this point. Hopefully we get a little evening star or a hammer. And at this point, I would have bought those 1697s back, kept most of the premium I collected, and then rode the move lower with those 1700s back down and still continue to keep my profits. And let's say Amazon would have came here but then finished the day at 1650 or 1640, that was a way for me to play both sides there. Okay, all right, so the tick is above zero, so we covered that, zero, and trying to go higher. All right, okay, now it's starting to set up. So it's 12:51. I may be adding soon, 12:51. What I'm looking for is a reversal pattern on the markets more than a confirmation on Amazon at this point, right? When the markets resume, so will Amazon. Markets continue higher, I will not add. Okay, so this was supposed to be if markets continue higher, I will not add unless it breaks lower on massive volume. So unless Amazon breaks lower on massive volume, sell volume, I will not be adding to it. But as the tick rises, and the markets rise, Amazon should follow. Okay, luckily today the correlation is strong. So markets and Amazon are behaving pretty closely to each other, and I like that because now I can play it accordingly. So as you can see here, this was the image I sent at that time. So of the tick, 12:56, this is what the tick was doing on the 5-minute. And I was like, hey man, this thing keeps trying to push higher. Now it's above zero, and even the 5-period MA is at hitting 500 levels. I'm like, oh, so that's a strong reversal there. I'm like, oh, so I got to be careful with this. So this is why I'm not adding yet. Because now the tick is saying, hey, man, we may be going higher. So now, and not at one point did it stay below. I mean, it stayed below zero for the most part. But at no point did it hit the 500 level here, okay? So that's what I was looking at. I was like, oh, okay, let's be careful with this, guys. So let's pay attention. So that's what I was looking at, okay? So now let's continue. All right, tick on a steady rise as noted by the 5-period in May. So now as the markets rise, if they set a doji, evening star, hammer, etc., I'll be looking to add to Amazon. Hopefully Amazon follows them higher and does the same. All right, so this is the image I sent over. The VIX is still falling, guys. The markets are still going higher. So now we're at 2760. Now we're at 2779, hitting the 50-period MA, and the Dow just broke above the pivot and also hitting the 50 MA. So now we're still going higher. What is the tick doing? Still going higher. Okay, and notice the difference between the last image and this one is the time frame. This is 10-minute. Just again, cleaner signals. But again, this is what I'm looking at. Okay. So now we have the 4 reds and a green as noted by RSI on markets above 80, possibly over 90, and a posting signal on the VIX below 20 and 10. So with that, now we want to see the reversal candle pattern. So now this is what I'm looking at, guys. This is what I like to call 4 reds and a green. So we got 4 reds and a green. And this is a key feature I like to look at for a reversal, an upcoming reversal, okay? So this is what I was looking at. Boom, boom, boom. Four greens and four reds and a green. Now we want to see a reversal pattern. Now we start looking for that beautiful reversal pattern. Now we want to start seeing those candles, those hammers, you know, that say, hey man, we are gonna resume the move lower. Again, we still have a bearish bias, so that's why we're playing the downside. I'm not gonna add any longs because that would be a riskier play. Now, awesome tick fade. This is when things got exciting. So now, about an hour later, like I said earlier, awesome tick fade. Signaling downward pressure is back on. I still want the pattern though, right? So here's the tick fade, guys. Look at this. It bounced up over 500, almost at 1,000. Boom! Instantly came back minus zero, below zero. I mean, you can't ignore that. That to me was a sign. I mean, it didn't just go up here and stay here or open here and like slowly. No, it just went up there and it completely came right back down, telling me, okay, the pressure's back on, guy. You know, we're gonna go lower. Okay, so now this is what I'm looking at on Amazon. Amazon is below this little trend line here, but you know, obviously I would just had to adjust those lines accordingly had it started to break higher. But now it's just trending on the pivot, right? It's trending on the pivot. So I'm not gonna get clear signals from Amazon at this point, you know, unless obviously, like I said earlier, we get a solid break below the pivot, telling me we're going lower. So now what I'm looking at is the markets. Okay, what are the markets doing? What are they setting up? And this is what I was looking at. I get my alert. Boom, hits the minus 500. Again, this tick fade to me was everything. I got my four reds and a green. Okay, we got a little morning / doji forming, and now we have reversal patterns starting to form on the markets. Okay, I like what I'm seeing. We're bouncing off those 50 MAs, and now it's getting to the point where I'm like, okay, I like what I'm seeing. And now we're lighting up red, which I said I may have mentioned before. Screen should start lighting up red. So at 102, so I will wait for the pattern. I said screen should start lighting up red soon. So at 102, I said that. And here's what I mean by lighting up red. Boom, boom, boom. And then all my other charts obviously had the same signals on the volume, which told me, hey, the pressure's back on. We are going down, guys. We're going down. So I said, okay, lighting up red, putting in my order, in the money. Got first fill, 110. We'll layer in. Added one more a minute later. All right. Tick tells the story. It's coming, 113. Keep watching. Pay attention to the time of day as well. So now stop still the same as before. If this fails, I will cut. So again, my stop was the same stop as it was before. So that 1653 area. Why? Because it's pretty much it's above the pivot and the high of that 30-minute candle. It was signal to me, hey man, we're not gonna go lower. We might stay paralyzed here for the rest of the day or go higher. So that was my stop. Again, my target is still 1620 area, guys. Okay. But I seen on the screen lighting up. So the screen is lighting up red. A strong conviction that the move to come now only. I have a strong conviction of the move to come now. Only issue was that I didn't wait for the candle to close on the 10-minute. Again, so I just didn't wait for a nice solid pattern. But I couldn't ignore what I was seeing on the screen. And I decided, hey, it was worth the risk, and I took it. So that's what I saw. But I seen on the screen, okay, but now I have enough indication to feel comfortable with my decision. So the spread move locked in the profits for the 1700 strike. Sucks. I'll leave that as is and let that expire as is. 2800 profit, limiting my 1700 strike. I think the profits for this one went up to like $75 to $80. So obviously, because I bought the other ones at around 44, as this one goes up, so does this one. So it just keeps my profits locked in, guys. So that's what that did. But I'm not losing money regardless on that position. But had it rallied, it was the best move to do. So that's why I locked it in. I was expecting it to go higher than it did. I am in the green on all. Market's reversing, and so is the VIX. Okay, here we go. So here's the reversal. Market's reversing, so is the VIX. Here we go. Here we go. Again, fully lit in red, guys. Over 80% on all. And here's the tick. What is the tick doing? staying again below zero, hitting that 500 level, minus 500 level. We're going lower. That's what I'm looking at. On the break of the low of the day, I will add more. Put in order to add. So once it broke the low of the day, I was gonna add some more to Amazon. Okay. Put in it. This was supposed to be I put in an order to add at the money. So now I'm adding at the money, which was the 1645. So remember, I added 1655s, and then I added at the money 1645. So always initiate in the money, at the money, and then support or supplement with out of the money. So I added four more. Okay, here's the image of what I'm looking at now. Now the markets are breaking below their little trends, confirming the reversal. Right, the Nasdaq is breaking below. E-minis are breaking below, and S&P is gonna shortly follow after. The Dow is the only one that stayed there a little bit longer. But again, four reds and the green, and the move is playing out perfectly. The tick still below zero. All right. All right, added for more. Doesn't get more clear than this. I was a little early, but the market internals told the story. Do you see it now? Profit is locked in on the spread for that one, but the key is to capture profits and get back in as necessary. No need to suffer the pain of a reversal. This is important, guys. If you see a good opportunity to take profits at pivots, at consolidation, take your profits. There is no pain to get back in later. You can always get back in. Just trade what you see. Okay, here I'm just recommending take Leo's courses. So take his courses, learn about the market moves and charts course so that you can have the bigger picture. So you can see the bigger picture, basically like I described earlier on this video here. Market moves is a great and charts course for bigger picture type analysis, okay? Trend broken on all except the Dow. So here we go. The trend is broken on all. Okay, except the Dow, but it's still at that 50 MA. It is soon to follow. Tick, again, still below zero, which will follow soon. It's not safe to be doing blow-off. It's not safe to be doing blow-off. Let me buy some calls strategies. That's what I was trying to say there. When the market is clearly headed lower. So it's not safe, guys, that the market is going lower. Oh, we got a strong blow-off candle. It's going to bounce. If anything, you add puts for the downside. It's just not safe to do that and risk money, because then you're more likely going to get stopped out, especially on days like today. I'm not saying that it can't be done. It's just not safe. It makes more sense to just keep adding puts. Read the book. This is not supposed to be read. It's supposed to say read. Read that book. It will help you on your way of thinking. The book I was recommending there is one I've mentioned already before, which was Mastering the Trade by John Carter. That's what I was trying to say there, okay? And I don't want to blow anybody's spot here, so I redacted this section here. Read the book. Also, read The Reminiscence of a Stock Operator. Also a must-read. Also recommended on John Carter's book. You're right. I'm stuck thinking most investors end up losing everything. When I was with and room, most all end up losing. Well, the bigger thing to look at is to learn. So you don't need alerts. So you don't continue to need advice. The point is that you want to be the guys that are, running rooms, the guys that are constantly making money, those profitable guys of the world. That's who you want to be, guys. You don't want to be the guy stuck depending on somebody else's analysis. You don't want to get stuck on analysis, what do you call it? Confirmation bias. Don't get stuck on confirmation bias. Where you're looking for confirmation as to why your trade is going to work. If you find yourself going to bed thinking and stressed out about your position because you don't trust your decision to get into it, and now you're going to Bazinga or CNBC or MSNBC or wherever, looking for reasons to why your strategy is going to work, you are wrong. You need to trust that you made the right decision, guys. You are wrong if you're looking for confirmation. You need to know that you did the right decision and that you have a plan. Have a plan, trade your plan. Have a plan, trade your plan, guys. There's always going to be enough reasons to support both sides of the story. Always, always, always. You can support both sides of the story at any given time. That's why there's always people buying and there's always people selling. I'm buying puts. Somebody else is selling those to me. right? So if I'm buying calls, somebody else is selling those to me. So as the markets continue lower, there are people always buying. As the markets go higher, there are always people selling, because everybody has different opinions. Everybody has a different plan, a different strategy. And that's what you have to remember. You know, you have to be comfortable with your decision and why you made that decision, guys. Don't keep looking for confirmation as to why somebody else did something, okay? So now what I'm going to do is go ahead and play the play-by-play video so you guys can see how I executed this live. I shortened the 5-6 hours to just 10 minutes because obviously I already took plenty of time going over this here, and I didn't want to bore you guys with a 6-hour long video. So I hope you guys enjoyed this. Let's take a look at that video. we go. As the day comes to a close, guys, what I was doing here was boxing Amazon in. And what I was looking for was a break below 1620 on strong volume. So as you can see here, I mark it on the 10-minute. What I wanted to see was a break below on strong volume to continue to hold this position for tomorrow slash today, basically. But it failed to do that, so I ended up taking my profit. And inversely, if it would have broke higher, I would have taken it. But because it stayed in between, I just decided to take my profits and call it a day. No harm, no foul. I can always get back in. Once again, guys, thanks for watching. I hope you enjoyed that. I hope you learned something. And don't forget to subscribe.